Okay, in this video, we will take a look at where we stand with Peepo and also the overall markets. It's good to take a step back and to look a little, well, we know that the market hasn't been very easy for Peepo in recent weeks. But it's not for Peepo, we've also had corrections on Ethereum, Bitcoin, and many altcoins. I see a lot of people looking at other emerging small coins, so-called competitors. The big difference is these coins have no benchmarks. They're new. With each one, there is euphoria. We will look at this right here with Peepo. So, here we had a big euphoria at the beginning that lasted 1, 2, 3, 4, 5, 6 weeks. So a month and a half, only to eventually decline, and we had to wait nearly a year and a half to rediscover these new prices. There was clearly an overvaluation here, undoubtedly a significant overvaluation of. And we even had volumes we never recovered. Later, even when we had our big pump that did 1 by 10, we never recovered as much volume. And that's normal as a small coin, which has just been born, has no reference points. So, the price has no benchmarks to guide itself. People often find it difficult to determine whether it is overvalued or undervalued, and as a result, the price simply needs to find a reliable benchmark, establish a solid structure, and then it will launch its true price action in the market. And here, unlike those other coins that are born and can, I'm not saying go straight into hype and get adopted very quickly. That was indeed the case with Peepo, the case with Peepo. These are coins where there was a huge marketing budget behind them, where there was a very active, very engaged, really competent community that was able to drive and push the price up to rapid adoption. These are very rare cases, and I don't like to trade on such very young coins. However, with Peepo, it's quite the opposite. The price has already been overvalued, it has already corrected well, and then it started to create a price structure. Unlike these new charts where the price has no benchmarks, Peepo has benchmarks. And it is on these benchmarks that we will be able to work, base a more serious effort with a more solid price, and build a community, etc. Moreover, so really starting in a structured and thoughtful way in growth. That's it. This avoids pump and dump schemes or other similar surprises. So, having to follow all the pumps, we end up chasing the ball every time and ultimately find ourselves without money. This is not the case here. We have work zones, and we will look at them together in this video. First of all, we recently had a correction that lasted 1, 2, 3, 4, 5, 6, 7 weeks, almost a month and a half, nearly 2 months. Yes, it hurts, but a 10x pump takes time to digest, and that has been the case. What I see here, and we're on the weekly chart, so it definitely indeed matters, is a perfect accumulation cone of just Livermore. I am joining two fences, and I am joining them perfectly. Zoom in, my fences are connected. Fence, 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 fence. These are the areas where the price reacts. So, not always perfectly. Look here, it nibbles a little bit below. And here, it won't completely touch the line, but it still marks a higher high. So it's important. In key areas, so here we have 0.4. All right? And here, if I put it back in bars, these are the closures right now at this moment. Close 1, close 2, close 3. So this line is very important. It is no longer in the red, it is in the green. I'm not viewing a 5-minute chart, I'm viewing a 1-year history on a weekly basis. No, it doesn't count. Yes, weekly over a year. If it's a small market cap, it's a psychology. These are price reactions. And whether there is little or no volume, I'm sorry, it matters a lot. So, indeed, it's important to acknowledge that. And here we had a key zone. When we hit here, we got pushed back. When we hit here, we got pushed back. We got pushed back. And here in this zone, with close, 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 we react very strongly. So we got there, we tumbled down, we touched it, and then we actually had a weekly candle that indeed truly engulfed the previous two. In 1 week, 2 weeks, 3 weeks, we have overtaken the previous ones. The reaction also occurred at the bottom of the cylinder. Key point 1, key point 2, key point 3, and we have not completely touched on it, but we're really close. That doesn't mean it's not possible for us to start accumulating a little now to really settle back on it. We'll see, I'll make a small projection. But here, anyone who doesn't see this is blind. We are not indeed dealing with a falling trend here, so we are not actually isolating a small time unit of a few days. This is almost a year, a cylinder of a year, significantly. Here we can see we have point 1 we go inside, point 2 we touch, point 1 we go inside, point 2 we touch, point 3 we hit, point 4 we come back here, point 5 we are here, point 6 we take off. We have a lot of excitement. We were pushed back. If I go back to the close, it is right here. We come down very quickly. Here, we go up and come down more quickly indeed. And you see that, in fact, it is a widening cone of volatility. So it is normal that the volatility is low right now, at the moment, currently. And then, as the cone gradually expands, the corrections increase more and more. The highs and lows of the cone are enormous, and it seems like it will never stop, but this is the reality. So here we are at point 7. Point 7 comes back. Look here on the chart at point 4, we are in the 60 zone, so point 4 comes back on it. This is also what we did. There you go, we came back to point 4, the top of point 4 at the close. There you go. And then we move on to the 8th, 9th. And what comes at the perfect time is that Bitcoin, at this point in time, has corrected quite well. We should now move to new highs, to new price discoveries. We get tired of this box. It might correct a bit more. And that's why Peepo will certainly continue to remain resilient despite this. And we still have quite a great wall of China, quite a dam, quite a wall that is indeed either the inflection point that blocked the price in a cup and handle pattern. So here, I carefully take my cup. Here, and I gently take my handle, slowly and carefully. We simply have a pullback on the consolidation, which is a temporary reversal in the trend. It's another pattern that has taken almost a year to mature and gives us a clear direction for the consolidation that we have reached, indicating the market's next move. We simply and clearly had essentially the ultimate target of the cup and handle pattern. There is nothing abnormal. We could have gone even higher. We hit the cup and handle pattern. We broke out, then we pulled back. It's just a pullback on a consolidation, which is completely normal. Prices don't rise indefinitely. It's easy to say in hindsight, but we didn't have that data before. I want to say that it's normal now, with more perspective, to be able to see it. Then, here, we could continue a little bit. Hop, get on the site, maybe even if Bitcoin corrects sharply, to dip below. Sometimes you see a little, there you go, dip like that, and then be able to move back to zones 8 and 9 and have our last impulse here. That's it, quite simply. So, this is something that will definitely make sense with regularly and consistently higher lows. We have higher lows, and this one is indeed still much higher. We are still, whether we like it or not, in an upward trend. It's important to see that. This is somewhat our scenario. What is also interesting, and we will see it now, we are going to go to a bit more now. Here on Big 8, we are going to look at the volumes a bit, meaning that if there are volumes, there are people trading the price. And we can notice here that in this dip, we thought it was the end, that we had much more volume. Oops, I made a mistake. We had much more volume than now, so that means we would never have believed we would go there. And here in moments of weakness, moments where the price can still go down a little bit, as I say, it can go down a little. Also, we are still in volume zones where the price is restarting. So, when we were here. So here, the lowest volumes, I will draw a line so we can notice it. These are the lowest volumes. In the previous dip here, we had even lower volumes. And the recovery volume here, the recovery volume here, the recovery volume here is equal to one of the strongest volumes in a while during the correction. We have an impulse there, a breakout of volumes. We are waiting for this real breakout of volumes to be able to sign a momentum. We haven't had momentum yet, so that's important. We've had very little volume. We still went higher. Here, we had less volume. We still rediscovered a new high. Here, we have much more volume than at that time. This means the coin is better known. Many more people are trading it. Now, let's go back to the 4-hour chart. And there you go. Here we undoubtedly have some indeed really large ones. So here, when we had our falling, I'm actually getting back online here. There you go. We definitely exited and impulse. We had our falling. We definitely came out very strong, pulled back, and then we started. And there you have it. We had a real big falling here. Now, you might say that we also had it here indeed. Actually, there you go. We also had a falling we failed. Know that in a big falling there were several small fallings that are created. Here, we also had a falling. We are still on the other side. We join it there. There are several fallings in it, and this one failed drastically. I had even done a small falling here, alright, which also failed. But here, we're not talking about a tiny little falling, Topi. We're talking about a large correction the size of this one, the size of that one. And so, we are clearly coming out of a falling. We have a very, very long trend. There you go. We get everyone involved and bring them back down. So this is typical of a falling where we are on the other side. Look here at what happened. We broke out very strongly. There you go. We broke out very strongly here and then we didn't stop from moving back up. We could have the same kind of pattern. Moreover, it really corresponds to Bitcoin where we could have the same kind of pattern here. Oops, I made a mistake again. There, I just take this and there you go. And we would have our pullback and a bit of accumulation. And that would correspond to our accumulation cylinder, which is here. We have our Jess Livermore cone. Here, our accumulation cylinder. And we can work more at the bottom. That's what he did at that moment. We had started again too quickly. Those damn sellers. Then we stabilized. And we had indeed hit our lowest point. I think Peepo seems to have marked the bottom. It will depend on the future of the crypto market. The moment when you need to panic is if you have Bitcoin pumping new coins that have just been born pumping Oppo, Apostasia, pumping PP, pumping everything pumping. And that we are at the bottom of our accumulation phase. We are starting to see this. Here is the coin dropping. I don't want to, but here we need to worry. If, on the other hand, the coin drops and Bitcoin drops and everything, we need to be concerned. It's not just Peepo. It's not just the problem that we are on a bad coin. It might be the problem that we are entering a much more serious bear market. And that it doesn't come from the Peepo community. It doesn't come from the asset. It comes from the entire crypto market short-circuited in the middle of its bull run. And there, I might have to admit, I don't necessarily want to say defeated, but we might go back into a longer correction where we'll find another box further down and then resume a Bitcoin bull run. Rather, here we are in September. I switch to daily. So rather in September, October, maybe the end of the year with the cone breaking and forming another box further away, and the entire cryptocurrency market, where Bitcoin might return to 40,000. It's no longer Peepo's problem, it's simply that the bullish trend has given way. Well, you might say it's a bit of a joke, but we would still have, impulsion falling, and we still wouldn't have made a lower low except if we say that this one is a lower low. I think it's more part of the two-step correction impulse, but the real bottom was here. So, yeah, it's hard to say, but obviously, this is something that happens if Bitcoin and the entire market drop. There you go. And to me, Bitcoin is in its box. There are traps, but Bitcoin hasn't dropped yet. And we had a very nice rebound zone. There, we had a very nice rebound on Bitcoin. We had a filing that went too fast. Second chance to enter, we don't make a lower low. So those who know falling wedges know that when it goes too fast, we often go looking for liquidity. So there might still be one last scare here to do, and then we go back up and everyone will see, oh, a beautiful W, magnificent. Meanwhile, at the moment, everyone is seeing the obvious pattern, which is an M for McDonald's. Until invalidates. If everyone is waiting for that target to reload, no one gets it. Maybe pretend to go there and stop before. So, it's true that if we have a big acceleration of Bitcoin, we might expect to see prices, a cone, an accumulation cylinder that might cause some last scares here and then recover anyway. In some accumulation cylinders, there are overflows due to fear. There were overflows due to euphoria. We can have overflows from the cone. That's it for me. Apart from the fact that we are on the other side of a falling and it seems to resemble this pattern, we have corrected well, we have filled all the imbalance. So here we had a big imbalance, here, so all green, we went to catch it. You see that there are always small imbalances like this, so it seems like the kind of imbalance it leaves before marking a bottom, quite simply. So we have re-explored the imbalance, we have a small support, and it often goes to discover prices. I think we have created the structure. We filled the imbalance. Big market imbalance. Filled by the price. Clack, 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 clack. We also left a red imbalance here. So for me, we might go back to it, we should go. Normally, going back to it gets pushed back. So we might actually, potentially, if we proceed this way, look for the imbalance. We would have, I clean up my chart a little bit more, just like this, and a little bit more. We might just have this. So we're going to mark our kind of bottom zone. We are going to look for the imbalance, bam, here, just like we did there. And then we will correct again. There you go. And then we would have our second acceleration, and we would have, well, if we see that, everyone will say, Peepo's grape is magnificent. Everyone will come back, and the newcomers without any history will all say, oh, it's great. We need to go to the OG. But people are like that. When we've done X10, everyone arrived at the top and rushed to us. Now that we're correcting, this is when the smart people come in and the idiots will run to other verticals. Don't be an idiot, be smart. It's in these zones that we buy, not when it has done X10. You have coins just been born that done X10, that done X5. Why are you chasing after the X5 and not being yourself? Position smartly beforehand, so now it's with us that you need to position yourself. After making 5x or 10x on these new coins, you intelligently take your profits, let the price correct and find its footing, and with the money from the initial euphoria, you reinforce your bottom and make another 10x on your 10x, which makes it 100x. That's how we trade. So, we look for smart bottoms, we don't chase verticals. I hope you enjoyed this video, that it shed some light for you, and if you have any questions, leave them in the comments. See you next time for a new video, people, and a new weather update.